Welcome to the Elyon Forex YouTube channel, and you already know what time it is. It is time for another brand new content. So today I'm going to be talking about market structure. If you remember vividly, on this channel, I did a video on market structure and I talked about the basic market structure and the advanced market structure. But my explanation in that video was just based on schematics. I didn't really use charts or candlesticks examples. So as a result of that, I got a comment from one of our subscribers. The name is Samuel Ezra, and he said, "Great content. Please, could you do a part two of this market structure breakdown using actual candlesticks? That will really go a long way in helping us understand it better. Thanks." And I actually agree with him. So, which is why I'm doing a video on market structure, a part two video on market structure using actual candlestick. So, and as you can see, I said I've added this to my to make list. Thanks for suggesting it. So that is what we are here to do today, market structure. So before I proceed, I would like to appreciate everyone that has been showing us love on this channel. You know, your subscriptions, your comments, your suggestions, and everything are well appreciated. And also, if you are yet to subscribe to this channel, please smash the subscribe button. We are trying to get to 100 subscribers and we cannot get there without your help. Please help us. We need to get to 100 subscribers. So without wasting time, let's just get straight into it. So currently I'm on the GBP USD chart, 30 minutes GBP USD chart. But before I proceed, let me just do a recap on the advanced market structure schematics. So if you want to see the schematics in detail, the basic and the advanced, you can watch the video we made on it. You will see it by the top right hand of your screen, top right corner rather of your screen. So so let's assume we have a downtrending market. Now, this is just a recap of the schematics. You have a downtrending market, you have the market trending like this. And how do you know a market is trending down? When we begin to break lows in the market, we can say that the market is trending down. So this is a basic market structure. It's a textbook market structure. You agree with me that the market does not always move in this manner. There are sometimes you might get advanced or more complex structures like this, whereby you have the market create a low, and you see something like this, you see something like this, you know, yeah. So this is a basic market structure, while this is a complex market structure. So looking at this now, you might want to ask yourself, what low is the market breaking for me to confirm that this is a downtrend? We could see that at this place or at this point, we had a break of this low in form of a break of structure, and the market created a new low and started retracing. So at this point was when the market structure got broken. At this point right here was when the market structure got broken, not this point here. This is just an internal structure engineered to sweep you off your feet, engineered to put confusion and engineered to give you FOMO, fear of missing out. So there are some times that some people by identify this low as their market structural low, which is not wrong if you know what you are doing. But sometimes you could get faked out. Let's assume that we had this high. Let me make this. You have this high like this, you have this one lower, you don't have something like this. So there are some people that after seeing this break of structure, they believe this is a break of structure and they mark out their other block, let's say AF for example, and they enter their trade, they just get stopped out before the market eventually comes back down. So and we could also refer to this as inducement, this I as inducement. Most of the time when you have something like this happening, I know I'm not talking about inducement in this video. I made a video concerning that. I will also leave the link on the video. So when you have something like this, most of the time you will discover that you will see a non-mitigated structure above which the market will tap into, leaving this space as an inducement. So, but that's not what I'm here to talk about. So if you look at this low that the market broke here is just an internal structure. this is still the external structure that we are following. So I'm not saying you cannot take the internal structure, but except you're an advanced trader, you might get burned out a lot if you are trying to take internal structure. It's better to just follow the external structure. But I'm not saying you cannot take the internal structure, but you must be a super advanced trader. You must know what you are doing so you will not end up getting burned. So that is just a recap of the schematic. So now let's look at the chart. So I'm going to be starting from this low, and the reason why I'll start from this low is because we saw this total breakdown in market before we saw this up push, and before the market started coming back down again. So let's start from this low. So the first question you ask yourself is, what low, like what is the lowest low that you can identify on this chart? So if you ask me, this is the lowest low I can identify on this chart. So the question you ask yourself is, what I created this low? What I created this low? So you see and you agree with me that this was the I. This was the I that created the low. This I right here created the low. All right. So if this market is to continue downtrend, we expect this I to get respected. But if the market is to reverse, we expect this I to get broken. We expect this I to get broken. And there's a difference between a break of structure and a manipulation. So I also have a video concerning that. You can check the channel. So if this I gets broken as a break of structure, we can expect a reversal or a change in the direction of the market. But if this I does not get broken as a break of structure, we can expect the market to continue going down. So I have this I marked, but this was where I marked. I did not mark this week right there. If you had marked this week, it's valid, but for me, I would not like to mark this week. And the reason why I would not mark this week was because, as you can see, this was the last point of supply. This was the last point of supply. This was the supply that broke all this structure to the downside. All this that broke this low here. This was the last point of supply. So I'm expecting this supply to fail to show me that, okay, supply is beginning to fail and demand is beginning to take charge in the market. So this is the I am going to mark out, because this was the last point of supply, or you can even say your last order block. So I'll take this off. So you can see that at this point we had a break of structure here, and the reason why I regard it as a break of structure, you can see that the market traded above this region for a while before coming back into the broken structure. So I'll denote this as BOS, templates, BOS. All right. So I have a break of structure. So when you have a break of structure, after a break of structure, you expect a mitigation play. And we saw that here that, we mitigated this other block that was here. So now, this is the first sign, or this is the first signal telling me that we are having a potential change in direction or a potential change in trend. So if we keep following the market order flow, now we are beginning to see that highs are getting broken and lows are getting untouched. So let me mark out the low. So this was the low, this was the last low. Let's say this was the last low right here. Yeah. So lows are getting untouched, or you can even use this low as your last low. You can see that highs are getting broken and lows are getting untouched. So this is telling us now that we are beginning to enter a bullish order flow. So we want to see more breaks of structure to the upside. So as we can also see, we see that after breaking this structure, we created this high and the market retraced. So this is our high. So we are expecting this high to get broken. And look at what happened. We also saw this high get broken here. The market traded above the high for a while before coming back into the structure to mitigate this other block right here. So I will also denote this as a break of structure. So now you can see we have two breaks of structures already, telling us that, okay, supply is beginning to fail and demand is being respected, because all these other blocks we have here are demand. They are demand levels in the market, and demand levels are beginning to get respected. The highs are getting broken and the lows are getting untouched. That's very important. Even if the lows will be touched, it should be touched as a manipulation and not as a break of structure. So we can see we are beginning to get our lows untouched and our highs broken. So as we can also see further up, we can see that after creating this break of structure, we created a high, and after the high, we had a retracement. So and after the retracement, we saw the most recent high also broken again as the break of structure, because why? We could see that the market traded a while above the broken structure before coming back to mitigate another block. So I will also denote this as a BOS. So we can now see that we are beginning to establish our order flow. So we are seeing that the highs are getting broken and the lows are getting untouched. So this is how to actually identify a complex market structure, because if you look at this now, we are following the major structure on this chart, because if we look at this, we can see that we are breaking internal structures. We are breaking internal structures. Are we saying the internal structures are not valid? They are valid if you look at them on a much lower time frame. But for this time frame, if you try to trade this internal structure, you might get burned. You might get burned, because I see that's the where a lot of people get confused. So let me use the part two so that it will be clearer. So we'll see that we had the market create this low, and after creating this low, we had this. All this that is happening is still within this range, the high and the low. We need to see the high or the low get broken before we can denote a break of structure. So as you can see, we had the high broken. And after we get the high broken, our new trading range is from this high to this low. We need to see this high or this low get broken. And as you can see, we had this, we had this, you know, we had this, we had this before eventually getting the high broken. So as long as we are breaking highs, we can say that we are in a bullish order flow, and we can see that we have printed out a new trading range, because this is our high, this is our high, and this is our low, depending on if you have unmitigated regions here. So for me, this will be my low, because this is the only, this is the only place where we have on mitigation. So as you can see, we have mitigation in these two lows, but this low we have another block that is yet to be mitigated. So this will be my new trading range, this high and this low. So I want to see this high get broken or this low get broken, and as you can see, we got the high broken. So that is just pretty much it. It's not difficult if you choose to ignore the noise. Trust me, all this noise, they are engineered to put you off your feet and make you run out of your wits. But if you are patient enough and if you are focused enough on what you want to see, or what the market is trying to tell you, you shouldn't be making this mistake. So now let's continue marking up our structure. So we can see now that we have this new low printed, and we have this new high printed, and after the high we had the retracement. So um this retracement now has mitigated this other block sitting right here. All right, so now we need to see this low get taken or this high get taken. So as you can also see, we can see that this high got taken in this move, and the market did not just take the high, it took out the high as a break of structure, because the market traded above the structure for a while before coming back down into the structure. So now I will denote this also as a BOS. All right, so now we have our new trading range. We have this low and this high. So we want either the low or the high to get taken. And as you can see, we did not get this high taken. Rather, we got this low taken. So this is now telling us that, okay, the trend is now shifting, or the order flow is now shifting from a bullish order flow, and we are now beginning to enter a bearish order flow, because now this last point of demand has failed. And it did not just fail, it failed with a break of structure. The market cleared, it traded below the structure before retracing back into the structure. So we can say this is a BOS, this is a break of structure. So as you can now see, we are now in a bearish order flow. All right, so now the question you ask yourself now is that, where is our new high and where is our new low? We can see that this is our new high. That is if we don't have if we have an unmitigated order block in this side. Let me zoom in to see if we have an unmitigated order block. All right, all right. So let me switch time frame. Let me go to the 1 hour to see if we have an unmitigated order block. It's not very clear on the 30 minutes. So on the 1 hour, what can we see? On the 1 hour, we can see that where is the eye again? All right, let me make it smaller. So on the 1 hour, we can see that this is the unmitigated order block we have. It was in this eye, you know, right here. Yeah, this was the unmitigated order block we had right here. So eventually the market mitigated it. So this is going to be my new eye. I hope it's not confusing. If it's confusing, please drop a comment in the comment section so that I will clarify it. So let me go back to the 30 minutes. We have identified our eye. So this is our eye, and this is our new low. So we want this eye to get taken out or this low to get taken out before we can now say, okay, where is the market going to go next? So we can see now that this low has gotten taken out, not just taken out as a break of structure. So I'll mark it out as a BOS, break of structure. So now you can begin to see now that we are getting lows broken, but our eyes are getting untouched. This eye untouched, this eye untouched, this eye untouched, but we are getting our lows broken. So now we have shifted from a bullish order flow now to a bearish order flow. So now the question you now ask yourself now is, do we have an unmitigated order block in this structure? So if you ask me, I can already spot one. Let me zoom in. So this is my unmitigated order block. So this is where I'll be expecting GU to come into. This is where I'll be expecting GU to come into. You know, if we are to follow this, order flow. Another point of interest, remember this is just a point of interest. You could also get another point of interest. Let's see if we will find another point of interest. Another point of interest this, could be this order block right here. Could be this order block right here. This could be our another point of interest. But for me, ultimately, I would like to see GU come here. And the reason why I would like to see GU come here is because we have equal highs right here. We have relative equal highs right here. That's one. And two, you know, if you watch the inducement video, you will see that this is looking like an inducement. Remember, inducement is a smart money trade because most smart money traders are seeing this order block. So we could see this order block become an inducement, you know. We could see these highs also become an inducement as well, or liquidity, whichever one you choose to see. So we could see GU come all the way up here. So in essence, what am I trying to say? Let me go back to the 1 hour so that we can see clearly. We can see now that we have transitioned from a bullish order flow to a bearish order flow. And how are we able to know that? By mapping out structure accurately. So trust me, you don't really need all this noise going on in between, except you are a scalper. There are some times that I drop to the 15 minutes time frame, you know, to actually go deep into all these internal structures. But if you are not yet comfortable with your external structure, you have no business really going into your internal structures because they might end up confusing you. So, and looking at internal structure, there are other factors to also consider as well. So if you are not yet there, or if you are not yet at that level, it's just better for you to just stick with your external structure. You know, looking at the external structure, everything looks so clean and so sharp. Where most people get confused is, you know, they get lost on, let's say, the 5 minutes time frame. You know, you are trying to pick out a structure on the 5 minute time frame, ignoring the external structure, and you just get confused. You know, you just come here and you just see a break of structure and you start looking for another block to buy, and you know it hits your stop loss, and you now start wondering, but I marked another block and all that. Because the truth is, you will find another block everywhere, but not every other block is tradable. So guys, I've come to the end of this video, and I believe that you are able to get one or two valuable knowledge from it. So if you want me to clarify anything, you can just drop a comment and I will make sure to read them and respond to you. So guys, also if you are yet to subscribe to this channel, please smash the subscribe button, like this video, drop your comments, share with your friends. Let's keep this channel growing. So I'll see you guys on the next video. Peace out and have a successful trading week. Bye for now.